Hey, Mark the Meerkat in for D7 with the weekend review, good through Sunday and March the 10th, 2019. Des is out on a family issue, so I'm here for him this week. Let's take a look. Was the market bullish or was it bearish for the week? Well, if you watched D7's video last week, he was warning. Probabilities were we're going to pull back, and sure enough, S&P pulls back 2.2%, the Dow pulls back 2.2%, and the Nasdaq pulls back 2.4%. That's right. So we did have a bearish week there. So let's take a look here at the daily chart here on the S&P 500, and sure enough, there we are. 1, 2, 3, 4, 5. Now look at on Monday, it actually popped up, and I'm going, hey, maybe D7 was smoking something on after he was talking about cannabis stocks, but no, it continued to fall right back down here on Monday, and then every day we close lower, including Friday. Even though it's a green candle, it's a lower close from Friday. So we did pull back over the 2.2% here on the S&P 500 daily chart. Let's go ahead and we'll go through the daily charts first. Here's the Dow. It looks pretty much like the S&P 500. Again, it gapped up here on Monday and then continued to fall all the rest of the week. On the Nasdaq, it pulled up here. On Monday, pulled back down here, and look at that. We're below the 200 moving average. Came right back down here and then worked its way back up. And then we got the small cap Russell here. It could not break the 200 moving average on the daily chart, and then finally it dropped right down here and below its 20 moving average. That's the green line here. Didn't talk. Let's go back to the S&P daily for just a second. I forgot to mention it is now below the 200 moving average again, which is a bearish sign. So we've got that going on with the daily charts. Let's take a look here at the weekly charts on the S&P 500, and again, it gives us a higher time frame to look at things. And sure enough, we're right at the 2800. We did a doji there in the last week for last week's weekly candle, and we have the red arrow right there. D7 put on there. Sure enough, bam, 2.2%, but stopped right at the 50 moving average on the weekly chart. So this is a possible line of support for the S&P 500. And then on the Dow Jones Industrial, similar, but didn't pull back all the way to 2,500. It was up here above the 26,000, pulled back for the week, and but did stop here at the 8 EMA and the 11 EMA exponential moving averages on the weekly candles. Possible line of support, not as strong as the 20 or the 50, but it is a possible line, or even the 25,000 for that matter. Now here's the Nasdaq weekly chart, and it snapped back here pretty hard to stop. Where would it close? Right at the 50 moving average, a possible line of support and resistance here on the weekly chart. So have we pulled back all the way? Yeah, maybe, or are we just resting here for another drop? Here's the Russell on the weekly chart. Look at that. It was basing above the 50 moving average. That's the blue line here. It was basing just above that and then snapped right back down here right to the 100 moving average and the this is the 8 and the 11 EMAs right there. So triple line of possible support there for the small cap Russell. Can't get anywhere without our bank, and sure enough, we had a sell on bank for the weekend. Bam, for the week, it was also down. All right, let's go back to the daily charts here, and I want to take a look at one more thing, and that is the VIX, the volatility index, or the fear factor here. Now we were the VIX was very high, here at the end of last year. It just rocketed up because of all the volatility in the markets, but we've been very complacent down here since we've been rocketing back up here in January and February. It's coming down, and we were very complacent. We were down in the 14s last week. Now this is the daily chart. Look what happened. It was rising all week long, but then on Friday, it topped out here above 18 and then snapped all the way back to 16. So there was fear building all week long, and then on Friday the air kind of came out and said, well, maybe we're going to be doing okay here. So that sign is that maybe we have stopped the drop. Again, probability wise. Again, if you are long in there, you need to be managing your stops. And and or taking a little bit of profit is what D7 advised you last week. And if you had a nice earnings on that, set a really tight stop or take a little bit of earnings out and let your winner run. So let's take a look here. Before I go on here, I want to talk about our mentoring program for a minute. We do have a mentoring program coming up over the weekend. It's a Saturday, Sunday, Monday. That's just the first 3 days of concentrated training that we do. And we already have several people signed up for that right now. And that's will be coming up in the next week or so. But if you want to know more about what our mentoring program is here, oops, I'm sorry, bring it over here. Go to groktrade.com, groktrade.com, and you can either hit mentoring up here in the upper part right up there, or right down here it says mentoring, and right there it says click right here, and then it goes into a detailed description of it, or there's just the basic facts down below here, so you can read about the program. But what we'd like you to do, the call to action here is, if you'd like to have a call about it, we can talk about what your trading is and whether or not it would be appropriate for you to be in our mentoring program, and whether we believe it could help you or not, and depending on what your situation is. So we'll have that discussion. But if you don't want to know detailed information about it, it's right down here, and you can read about it. Oh, there, what's that guy doing in there? All righty. Again, the reason that we're so committed to do a mentoring program with folks is that 89% of all retail traders lose money in the market. In fact, they blow out 100% of their trading capital, 89%. So what we'd like to teach people is what the 11% are doing, those that make money over time in the markets. You're not going to win every trade, but you can make money over time. So that's what our mentoring program is about. It's 3 days of concentrated trading, but that's just the education. That's just knowledge. What we're going to give you is the wisdom, is that we're going to sit beside you as you implement that into your trading. So there's the knowledge, but then there's how do I apply that to my trading. That's what our mentoring program is about. So it's a big, huge package deal here. It's all together. We're not going to keep charging you for, helping you out. No, we're here and committed to giving you the wisdom to apply it to your trading. All right, so that's our mentoring program. Let's go into the Fang stocks for a minute here. Because what happened is the markets pulled back 2.2 or 2.4%, didn't they? But you know what didn't? The major growth stocks did not pull back nearly as much as that. So let's take a look here at the Fang stocks. We'll start with Facebook. And we had a buy on Facebook. It was in a bull flag here for those of you who don't know the trading patterns. And what happened on Monday was the market dropped. Oh, boom, it popped up out of there. And then it went and above its 200 moving average. And then it went up again. And then on Wednesday it went up again. So as the market is dropping all week, Facebook was going up. Now it did pull back, and then it came back and hit that 200 moving average on Friday, and they said that's where it opened, right near it, and then boom, popped right back up again and ended up positive for the day. So it only had one day that it actually dropped in price, while the rest of the market had 5 days in a row. So that's on Facebook. Next, let's take a look here at Apple. Now, Apple, actually last week, Des had said, hey, we had this line of support drawn in here, and he had when it was running along this 20 moving average, the green line here. And let's stretch it out a little bit more here. And he said, watch it if it doesn't drop below the 20 moving average. Well, it did drop below the 20 moving average. It opened below it on Friday, but then worked its way and closed above it on Friday. So again, this one did not drop over 2%. It did it this week? Nope, not on Apple. It's staying up there. Now, it is in a rising wedge, which is a bearish formation. If it busts below that, the probabilities are that it could drop. It started to, but nope, then the bulls brought it back right back up again here. So we'll have to wait and see where Apple goes from there, but not nearly as bearish as the rest of the market. Then we have Amazon here, stuck in this, look at this tight range it's been stuck in. In fact, it's been sitting here right at 1600. I see I drew this blue line in here at 1600, but then I noticed, look at this is the 50 moving average, that blue line. Look at the 50 moving average it's running along here. But let's see here, 1, 2, 3 days that it actually closed below the 1600 since the first of the year here. So in in 2.5 months here, it's only closed there a few times. So it is in a very tight range. Now it did peak out here and it did pull back, but where it stopped right at its line of support, and the bulls, even though it pierced down here, the bulls brought it right back up and all the way back up here to 1620. So Again, looking a little more bullish than the rest of the markets. That's good because internally here, those growth stocks are holding the market up and saying, no, we're not going to drop nearly as much. Netflix also very, very high here on its high base and pulled back below this $350 area, which was acting as support right here, and it came down and right back up to it. And then the last of the Fang stocks is Google, and again, it broke out on Monday. It broke out on Monday and Tuesday, and then did pull back here down the last 3 days. But on Friday, it hit that 200 moving average, which was resistance here, broke out, bounced off of it. So that 200 moving average, big red, can make a big difference. Hey, what I'd like to do now is to give you a sampling of what our mentoring program is about. I have what we call the Meerkat Top 10 Trading Rules, and I'd like to actually give you those first 3 rules that we teach in our mentoring program, just to give you a little bit of a sampling here. So here we are. Let's talk about Meerkat's Top 10 Trading Rules. Trading rule number 1, protect your capital. Capital preservation is key. You must protect your capital, because if you don't have money to trade, folks, you can't trade. So again, we don't want you to be that 89% that lose money in the markets. In fact, many of them lose 100% of it. We want you to be those who are making money over time in the markets. How do we do that? You always, always, always trade with a stop loss. Always you trade with a stop loss, period. All right, that's how you protect your assets over time. Next we have, you need to plan your trade and trade your plan. So how do you do that? First of all, you always know what your risk is before you trade. You always know your risk before the trade. Now, what is risk? Risk is the difference between your entry and your stop. Well, rule number 1 says you're always going to use a stop, right? So you have a stop and you have your entry. So it's the difference between those two. And that's your risk in the trade, not how much you have invested. There's how much you pay for the price of the stock, but the risk in the trade is the difference between those two. So if you know what the risk is, then you can, if you want to minimize your risk, you need to how many shares should you buy? 1,000 shares? Well, maybe, maybe not. So it will all depend on how much risk you have in the trade, so you can manage the amount of risk you have on any one trade. And then you need to set a profit target so that you can then determine what the reward could be, and what is the target for profit. That's the difference between your entry and where your target is. That's your possible reward. Because why? We want to determine real quickly is it worth the risk for the amount of reward that we could possibly get out of it. And again, it's about probabilities. It's not about certainty. It's if you want guarantees, well, as Clint Eastwood says, if you want a guarantee, buy a toaster. So we are going to be teaching you how to do that in the mentoring program. And then the trading rule number 3 out of 10 is cut your losers short and let your winners run. If you've seen some of my videos, I say that a lot, and that's from a book, Super Trader by Tharp, that he talks about. He only has 2 trading rules, and this is number 2 of his 2 trading rules. And because we say cut your losers short, too often as a trader we tend to live in hope. It's going to come back. It's going to come back. It's going to come back, and then we end up with this big loss that wipes out all of our gains from the trades that we made money on. And again, that's what the 89% are doing. So how do you stop doing that? Well, you honor those stops. So you have a stop in place. If it breaks, if it stops out, you're okay with that, because you're going to place it in an area in which, if it does break below that, you don't want to be in the trade, right? So you're going to thank it for stopping you out and protecting your capital, just like rule number 1. And now, how do we let our winners run? Well, we call it scaling out of our winning trades. As it gets to an area of major resistance, and it stalls there, well, we can take out a partial and then move our stop in the money. Now we have a guaranteed income trade. Now it's not a matter of if we make money, it's a matter of how much we're going to make. And so how much can we actually get out of this car by letting our winners run? Now again, we'll teach you how to do that as part of our trading. We actually talk about what are the rules for entering, to where the odds are going to be in your favor. How to manage your trade during the trade. We have specific rules for that, and we have specific rules on how to get out of your trade at the appropriate place so you can maximize your gains while minimizing your losses. So this is Mark the Meerkat. Hey, I just want to thank you for tolerating me all this time. Again, if you have any comments, go ahead and put them in the bottom down there. And I know I'm not D7 here, but he was not able to be here this weekend. So, but just remember this: cut your losers short and let your winners run.